Hi, day 3 of the challenge and a little film recommendation. Let's roll the intro and I'll tell you. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. And what I'm trying to do is put trading in the real world and kind of show you a little bit about what I do for a living. And part of that is a bit of a challenge that I'm doing this week, and today is day 3 as I said at the start. And the idea is to take £500 and grow it by 20% in a single week. In other words, add another £100 to it. I know most would think, 500 quid, that's not a lot. But that's the whole point. I'm trying to put trading in the real world. So if that sounds good, please click the subscribe button, smash the like, click the little bell icon if you want to see more content like this. But if you've got a question, by all means drop it in the comments below, because I genuinely answer every single one myself. So how has this all come about, and what is the subject today? Well, at the weekend, I normally get a flurry of emails, some good, some not so good. And some of the not so good ones kind of got the better side of me in proving a point. And this is the challenge. And then on Sunday afternoon, I was watching a spectacular film. It is really good. It's called Ford vs. Ferrari. And if you haven't seen it, about Carroll Shelby and the man's competition race that Ford won, it is a superb film. But it was one of these things that got me thinking this morning about a conversation I had last night. Now, the conversation was a bit one-sided in the sense that it was more screaming at me and just telling me everything I do is wrong. And I'm trying desperately to be polite and just say, look, I think you're wrong. You know, we're on two sides of the fence. And it's a bit like this film. Because in the film, everybody laughed at Ford when they said they were going to win Le Mans, because Ferrari is well known for dominating racing. It has the kudos of the luxury car market. But in reality, it was flawed. It looked great on the surface. But it was Ford that dominated the race. And their car was infinitely better, though everybody else thought it was going to be a laughing stock. So, at the end of this video, I'm going to put a hole in the argument that was given to me last night. You see, the argument was along the lines of the chap who contacted me. He wasn't a proper Popeye. He wasn't a forearm sort of bell end that I normally get. And you know them.
You ding-dong!
Give it to me again.
You ding-dong!
Oh, make it stop!
Sorry. he was just making a point. And but his point was quite aggressive in the sense that he thinks what I do is stupid. And I was like, well, why? I look at the markets different than what you do. This is a chap that was a day trading scalper. I asked him how many trades he takes on his last trading day, and it was 14, of which he lost 9, won 5, but he was on a 2-to-1 risk reward, so he ended up making money. But he only made a little bit of money. But in his eyes, he was right, because he had a tight stop loss of just over 10 pips. It's about £1 a pip anyway. But he was getting cut constantly, and he lost. But then when he won, he got 2 times back, which offset, and at the end of the day, he was in profit. So what I'm going to do is I'm going to put that scenario into today's scenario of the way I do things, because I look for 1-2 trades a day at best, and they're always high probability, so I don't go into them unless I am pretty much certain I'm going to get risk free in them quick, and then I manage the trade from there. But I'll go through the maths at the end of the video, and you might be able to see roughly where I'm coming from. Okay, but before that, I'm going to play you the trade that I've done today, because I was at it very early morning. Well, I was at the screens at 6:30 this morning, so it's been a bit of a long day for me. So I'll run that through, and then I'll summarise at the end. Okay, I'll see you on the other side. Morning. Day 3 of the challenge to turn £500 into 6. We on track, as you can kind of see here. £60 and 74p, 12% growth over the last couple of days. I'll go more into this later because I'm about to do a setup. But these are the trades. As you can see, they're pretty sparse. I have brought down the risk considerably. It's a little bit too much to bear, to be honest. So I'm looking at about 5% for each position, opening up 2 at a time. So it's still 10%. It's pretty high, but it now means I can run the account a little bit easier, in the sense that if one of them runs away from me, it's not going to cripple the account, which is not good. But as the account grows, I can pull the risk down. So I'm making sure that I keep an eye on all of that. Sorry if I'm a bit jittery. I'm watching 2 screens at once because it's just gone 5 to 7. And I'm ready to do the first trade for the rotation. So if you bear with me, I'll come back to you when I've got it set up and ready, because it looks like it's coming into play now. I've put a couple of little target points in already. I am going to be going long, so I'm going to go against the grain. Okay. It's a good little strategy, and it's a nice way to start the day. I might actually do a video about that, about the way that I start my day, because I do so much between 6:30 and 8 o'clock. Then I kind of have a break, then look at something else, then another break, look at something else, and just build my day up that way. But talking of building my days up, I can hear the Kraken awaken upstairs, so that means she might make me another coffee. But as we all know, Scruffy likes a coffee. Then again, might not, might have to make her one. Because I am quite nice to her, you know, contrary to belief. Anyway, this is setting up, so I'll come back to you when this is done and give you an update. Oh, talking of the Kraken, here it comes. Hello, my love.
How you doing?
See like how Hollywood that is. She wakes up like that all the time. It's like, wakes up beautiful and cinematic.
But you want a coffee?
I'm wanting a coffee, because when I wake up, I look like I've just crawled out of a skip. Well, I look like I've crawled out of a skip at any time of the day, to be honest. So, right, let me do this, because it's getting ready to rock. I'll come back to you in a minute. And there you go, guys. Pretty good. Scaled it all the way down to 2 and 3p and still pulled in some decent figures off a 3p position. 3p. But what did this do to the spreadsheet? How well are we doing on this challenge? Well, let's have a look. It's done it an amazing job because I haven't lost a trade this week. And it looks a lot. That should really say positions rather than trades. Because I haven't traded that much, to be honest. I'll show you. Where you see it saying trade 1, trade 2, they were opened up at the exact same time. So it's essentially the first trade. And then it's managed. And then trade 2, obviously they traded up at the same time. And the TP means that I have been carving profit off from that position manually. Because if you've seen other videos, I'll normally open 5 or 6 positions at once, each with separate targets. And that would do the scaling for me. However, because I'm constricted in my balance, I haven't got that luxury because it would take up all of the margin if I did it. I can only open up maybe 250p trades at a time. And at the moment, my bid size is up to about 65p. So I might just say get 265p trades, but it's still touch and go. And what I have to do is I have to manually close off part of the positions. And that's why you see some of these down to 15p and as in today, even down to 2p. Okay. So you're just taking little bits off, but I have to manually do it. Okay. So what happened today? Well, I only really needed to trade once because this morning hit the target. And the target is over 5 days, 20 quid a day. It gives me my £100. My £100 gives me the 20% growth. Job done. Okay. And I looked at the DAX rotation strategy that I do quite regularly. It presented itself very early morning because I started around 6:30 this morning. And the conditions seem to be correct. Now, for all you're seeing these small figures, the initial, because I do document as well, just to give you an idea of what I'm doing, is it was a rotation setup. I was going against the grain. So for all the greater trend was down, I went long. I needed to widen the stop out, but because it was a volatile market and the margin requirements are a little bit higher on the DAX, I could only open one position up. So what I decided to do was 62p is the initial position size. It is 6% risk. Okay. And it needed to be there to put the stop out of the noise. Okay. Now, if it needed to be further than that, I would have reduced the position size to give me a wider stop. But the actual risk of the account would have still been 6%. And on this size here of 62p, it was 54 pips. And it was the right place because the market did dip down if you watched it. And I measured it and it went 45 ticks down. So 9 ticks to the stop. Pretty darn close. And if you look at the way it went, I caught most of it. Okay. And then off it went up, did retrace and stop me out at the end. But I've been scaling all the way up and it paid me. Result. So to the chap I was having the conversation with last night, when I go on the whiteboard in a moment, I'm going to put a few holes in your argument. Okay? Because when I'm trading, I don't look for a multitude of trades like what you were taking the other day. I take a sniper approach. I look for 1, 2 at best, but very, very high probability trades. Okay. Over an 80% success rate chance. In other words, all my ducks are aligned. But do get it wrong. And sometimes one of those ducks gets shot because Farmer Giles is in the bushes and knackers my plans. But not this week. Planets are aligning. So Langers is a happy boy. Out of these 6 trades that I've taken, it's ended up being 18 positions. So it looks a lot, but that's been across 3 days. Whereas the chap that I was discussing did 14 in 1. Scary. Okay. And it has generated £86 and 10p, or just over 17%. So I've got very little to do tomorrow, and I may even complete the challenge tomorrow. And again, what happens if you complete early? Quit. It's a bit like the same as today. I did more than £20 today, which is my daily target. So I didn't trade any further because I don't need to. And that is the moral of the whole story of this challenge. And you'll hear me say it on numerous occasions throughout the videos because I really want to hammer this home. Less is more. Okay? And that means if you're doing a swing trade, less is more. Because you're essentially looking for one good trade, lasts a few days, gives you a good payoff. This is the same. I look for a very high probability setup. I trade it, hits the target, and then I do it again tomorrow. Don't re-enter the market, so I'm not at risk. But I'll explain a little bit about that on the whiteboard, or I'll try to. So, everything's rocking. I'm pretty pleased with what's going on. So let's go and put a few holes in the... I can't call him a Popeye because he's not. And if you're watching this, don't take it as offence. Although I didn't need a 2-hour conversation and my phone going off to the point where I had to switch it off because you disagreed with me. Okay? I disagree with people all the time, but I don't get into a flurry of arguments over it. So, never mind. Anyway, I could almost get off on a rant there because on the other side of the coin, because of the way he went at me, I'll actually wind that back. I don't give a toss if you were upset because you stuck it into me. And it's as simple as that, my friend. Yes, you didn't swear at me. You weren't too insulted, but you did say everything I do is a waste of time and I'll never make it as a trader. Well, maybe my 15-year apprenticeship is not paying off. Let's put some holes in your argument. Sorry, I was nearly off on one. I really nearly got off on one. I'm going to play with my toys. I'll play with my toys and you look and watch the whiteboard because I did it earlier. See you on the other side.
Okay guys, so now I've had a little bit of a grumble and give you a good recommendation on a film because it is excellent, by the way. And hopefully there's a director out there because I'm not exactly Steven Spielberg, but I do have a good film for you. Based on the same lines as Ford vs Ferrari, but Scruffy style. And this film's going to be called Scruffy vs Gobshite. And I'm going to put a couple of holes in the argument last night. Trying to get it through to him was like nailing custard to a ceiling. But let's break it down based on the trade that I did today. Because the argument, as I was explaining, was his all or nothing, a higher win rate, is far superior to what I do, and scaling is a waste of time. Well, let's put it to the test, shall we? So, on average, as he stated, he takes 14 trades a day, 2% maximum risk, with a 2-to-1 win rate. Alright, that's good. Asked him how many times he won, how many times he lost on his last trading day. Took 14 trades, won 5, lost 9, ended in a profit. Well done, you. Well, let's have a look at the figures, shall we? So this morning, I started with £560 and 74p. So put that up there. 560, 74. So both sides is going to start with that. Reasonable. So let's break his trades down. Took 14 trades. 14. The breakdown of that was he won 5 and lost 9. Okay. His risk within that was 2% per trade, which is £11.21. So 2% risk equals 11.21 at any one time at loss. And he was happy as Larry because he made a profit of £11.21 at the end of the day, which is, I can understand that, because if you have a higher win rate, you can have some losses and still end up in money. So he made, his profit was equal to that. But that's all he made. That figure there. So bear that in mind. But let's analyse how much of a risk he actually put on, because in his mind it was just 2%. It's not. It's not even close. Because he took multiple trades throughout the day, each with 2%. You add them all together. His risk on the day, not the trade, on the day, is £157 and a penny. So his total risk, all right, is £157 and a penny, as I just stated, which means the percentage risk against his account was 28%. He risked 28% of his account on a single day to make £11.21. And apparently that is brilliant. Now the textbook does agree with that, but I don't. You see, I wasn't trained as a trader the way that some of these guys are, where it must be this to do that, you're allowed so many losses. I was trained as a businessman. And when I worked in a corporate life in a blue chip company, I was trained profit and loss as king. So let's break down what I did with the exact same capital. I took one trade, just one, at 6% risk. So my figures are, I traded one and I won one. All right? And I know you can say, well, what if you lost? Well, if I lost, I lost. All right? But I'll get onto that in a second. My total risk was 6% to start with. 6%. Which was a figure of 33.64. So I initially risked 33.64 on that trade. Yes, it's high. Nearly 3 times what the other guy was. In fact, it is 3 times what the other one was. But I scale, and I was risk-free at £9.21. So my first scale was £9.21, almost the same as his total profit for the day, and I was risk-free at that point. No more risk. I can only win. I then scaled it further 5 times. So I had 5 scales, taking money off as I go up, and I ended with a profit of £25.33. So in the grand scheme of things, just doing the maths the way that I do it, I could have taken that trade 4 times to his 14. So I think 4 is a bit much, but I still could have done it and stayed in the risk parameter because my money risk was far less than his money risk. My initial risk of 6% is certainly less than 28%, and my profit was far greater. So you tell me, who won the race? Was it the scruff or was it gobshite? And I think that's the difference between looking at the charts as a business perspective and looking at the charts as a punter, thinking that you're a trader. Because if your hit rate is less than 50%, you are a gambler. And I'm sorry if that upsets a lot of people, but that is a cold hard fact. Because that is no different than just pulling a fruit machine arm and hoping you hit a jackpot 1 in 10. Simple as that. So there we go. Let's jump back on the screen and we'll have a quick summary.
So that was that, guys. Was I right? Was I wrong? Let me know in the comments. It'd be great to see what your opinions are. But all you need to take away from that is we all trade differently. We're trying to get to the same destination. We just use different roads, that's all. So it's not really up for an argument. And if people disagree with me, that's fine. I may disagree with them, that's fine also. But I won't get into an argument because I disagree. Hope that makes sense. So, day 4 tomorrow. I don't have a lot to do, but I could screw it up and lose the lot. But if I keep my risk managed, then yes, it is 5-6% and one thing and another. But as long as I control it, I should be okay. And that's the main thing. Control it. Don't let your trades run away with you. And don't let them get out of hand so they wipe out your profit. Because one of the rules I have in my business plan is I never give away half of my profit. So if I've got £100, I will make certain I have 50 completely locked. And the rest of it is house money to offset. Hope that kind of makes sense. Anyway. So, another good day. And remember, do what you love, and the money will follow. See you all in the next one.